Section 8. Deeds. Contracts for Deed 1. Lender provides financing to the person who is buying their property. The seller loans the buyer some funds and allow the buyer to stay on the property. The buyer is obligated to make the payments on the property. Contracts for Deed 2. Who has the legal title? The lender. Who has the equitable title? The borrower. Deeds. Provide evidence of the transfer of title of real property from a grantor to a grantee. Deed requires the grantor must be legally competent. It must be delivered and accepted and contain a granting or action clause. A deed does not need to be acknowledged to be valid. A grant deed. A quitclaim deed is a deed operating as a release intended to pass any title, interest, or claim which the grantor may have in the property, but not containing any warranty of a valid interest or title in the grantor. Constructive notice. Acknowledgement. Section 9. Title insurance. Title insurance. The standard policy is the one that most buyers obtain, protects the policyholder from forgery in the chain of title, defective delivery of a deed. A standard policy does not cover a site inspection or a survey. An extended policy covers improvements on adjoining land. An ALTA policy helps with a dispute over property lines which would be disclosed by a survey. Title companies would research and examine the following resources: the county clerk's office, the county assessor, the county recorder, and the federal land office. They want to make sure it is clear title, which can easily be transferred to the new owner. Chain of title provides a recording of any prior transfers and or encumbrances that pertain to a particular parcel of land. It is important when deciding to issue the title insurance. Abstract of title is a written summary of documents. Preliminary title report. Section 10. Escrow. Escrow involves the deposit of funds and or instruments by buyer and or seller with a neutral third party who has agreed to execute the provisions of an agreement or contract. Rules of escrow can be found in the Financial Code. Escrow duties. Escrow instructions are executed by buyer, seller, and third parties. If an escrow officer receives signed instructions that conflict with the purchase contract, the escrow instructions prevail. A debit is money you owe when escrow is closed. An example of debit for the buyer would be the purchase price. A credit is money that is owed to you. An example of a credit for the seller would be prepaid taxes. Short rate refers to a less than pro rata when the insurance policy is cancelled before it expires. Insurance is the promise of reimbursement for damages for the promise to pay. With respect to fire insurance, the policy should allow the insured to neither gain nor lose in the event of claim. Impounds are created for recurring costs such as taxes and insurance. To move in early or make repairs before the close of escrow, buyer must obtain the seller's written permission. Section 11. Taxes. Marginal tax rate is the tax rate that is applied to the next dollar of taxable earned income. An adjusted cost basis is the original price of an asset used in determining capital gains. It usually is the purchase price. Tax shelters pertain to income taxes. It is a general term used to include any property or other investment which gives the owner certain income tax advantages, such as deductions for property taxes, mortgage interest, or depreciation. Adjusted cost basis Income properties 1. Income properties 2. Capital expenditures made for improvements to property are added to the cost basis of the property and then depreciated. If an income property loses value, the owner can deduct that loss. Tax-deferred exchange is often referred to as a 1031 exchange. This type of exchange allows a deferment of taxes, but the properties exchanged must be of like in kind. Boot sale-leaseback. The seller becomes a tenant, thus allowing the seller to deduct all of his future rent payments as business expenditures. In a sale-leaseback arrangement, the buyer should not be concerned with the seller's book value. Personal residence. Allowable deductions for personal residence include interest, taxes, and some uninsured casualty losses. If the owner of a condominium pays interest on a mortgage for his share of common areas, he can deduct that interest on high income tax return. Property is always reassessed. Property is always reassessed upon sale. If a buyer or any other property owner felt that his property has been overassessed, he can make an appeal to the Assessment Appeals Board. Tax calendar. No darn fooling around. The first installment is due November 1st and is delinquent December 10th. The second installment is due February 1st and is delinquent April 10th. If the property tax is delinquent, Melrose taxes must be disclosed by the seller. Ad valorem is a tax that is assessed according to value. Intangible personal property is not subject to taxation. Real property and tangible personal property are subject to taxation.